Let's get to Kevin Green, who joins me now, and we have plenty of data to get you across. So let's start with some of the jobs data, which is front and center, given, of course, it's a big week on the labour data front. What are you seeing as far as the JOLTS? Kevin, good morning.
Well, we are seeing the JOLTS data actually coming in slightly better than the street's expectations. For the month of August, we saw openings at 7.227 million. Street was looking for 7.19 million, and we did see a little bit of a revision to the upside for the prior month's print. So we are not seeing a massive reduction or a massive deceleration in the amount of jobs that are being posted at this point in time, which kind of depending on where you're at when it comes to the economy and the Fed stance could be a good thing or bad thing. We have seen this move to the downside for JOLTS or job openings over the last 6 months or so, but we are still actually at elevated levels compared to what we have seen before COVID-19 here. So this is actually a really decent number. We are seeing maybe some stabilization here for the most part, and it seems like the market right now is really still trying to digest it. We haven't seen major moves to the upside or downside when it comes to yields. It does also appear that the Fed rate cut expectations for October for the most part have been steady post this report as well, and I think that's actually a good thing. Now, we will have some more labor data coming out the remainder of this week, ADP, and then maybe having the BLS jobs report on Friday as well. So overall, decent number when you're looking at the labor statistics, at least for this data set. And I will just say, this one's kind of very volatile. It could also be a little bit misleading. What we have seen, Sam, in the past is a lot of jobs posting available jobs onto their websites and things of that nature, but those jobs may not actually be fillable at the moment. Basically, a lot of these companies try to fill up their Rolodex in the event that they do need to find work in the future. That has been a trend and probably why we still see an elevated JOLTS number compared to pre-COVID-19.
Right, so obviously this being just one part of the bigger picture here as far as the overall labour market, no doubt some encouraging numbers, as you say, stabilising a bit. That obviously is going to feed into what the Fed does next. That is obviously pending that we get the other jobs data out later in the week. You and I have been discussing that over recent sessions about, whether that looming government deadline and a shutdown would certainly impact that. I'm just wondering, as people are looking for this sort of Goldilocks type scenario where the jobs are holding up enough to not sort of scream recession, but sort of softening enough to support the Fed's narrative. What you're seeing as far as the data that we've got and what your expectations are for the rest of the week.
Yeah, I mean, we still have a lot of data points in order to kind of get a better picture as to the labor market. If you're looking at initial claims over the last 2 weeks, they have been lower than the street's expectations, which is actually a really good thing. You also have the seasonal factor when it comes to the labor market in September as well, which is why the jobs report on Friday is going to actually be very key. Do we actually see a massive revision to the upside for the month of September? And do we actually see a revision for the August print as well? This is exactly what we saw this time last year when the Fed started cutting fairly aggressively, and then we did see a bounce back when it came to the labor market conditions, which once again could dampen the expectations of further rate cuts. Probably in the near term, in October or even December, you could still probably price in at least 25 basis points, but I'm not sure if 50 basis points is going to be completely locked in if we do see a rebound when it comes to the labor market as a whole. We also have some consumer confidence data, Sam, that is a little bit weaker than the street's expectations. You are seeing the market kind of bounce a little bit on this news as well as consumer confidence goes a little bit lower. That could also lead to maybe a slowing in consumer spending, tightening the economy just a tad bit, once again fueling the thought that rate cuts could actually spark economic growth and consumer demand in certain parts of the market. So I would say this is kind of a Goldilocks print that we've seen over the last 5 minutes, 10 minutes or so, and it seems like the market for the most part is reacting pretty positively to these data points.
Yeah, it seems like it. I'm just looking at that 10-year. It's ticked lower. We're at for 4.11 right now, and also the dollar backing off ever so slightly as well, perhaps fueling those rate-cutting expectations. I'm just wondering, as far as what the consumer confidence survey is telling us, what really stands out to you about how people are feeling about inflation and the jobs picture right now?
Well, obviously, we have seen this data point. You are seeing some pressure when it comes to the inflationary front. That has been the trend for not only the consumer confidence number that comes from the Conference Board, but also the University of Michigan consumer sentiment data set as well. And you continue to see a little bit of pressure there. And then the overall outlook for the economy continuing to come in just a tad bit as, once again, labor markets are tightening up a little bit. The thought about wage growth moving forward for a lot of consumers, that expectations starting to dampen down as well. And over time, according to Jerome Powell, over time that could also lead to lower inflation as confidence also does kind of wane here. So once again, this is still showing this consumer confidence index number is still kind of declining to the downside here. It has been declining pretty much since the middle of 2021 or so, but it's not a massive drop off in which we would have a significant amount of concern here. So we'll pull back in consumer confidence, hopefully mitigates a little bit of the inflationary pressures that we see in the market here, and then the Fed can continue to cut rates throughout 2025 and 2026.
Okay, consumer sentiment 94 versus 96 are lower than expected. The JOLTS, however, better than expected at 7.227 versus 7.19. So that was the data that we got this morning. As far as stocks are concerned, Kevin, speaking of some of that consumer confidence, what have you been seeing as we close out September and the quarter with respect to staples in particular?
Yeah, we have seen some weakness when it comes to the staples sector just as a whole here. Obviously, Walmart, Costco, very big components when you're looking at the XLP, or even if you're looking at the S&P 500 Consumer Staples Index itself here. But we have seen a pullback kind of getting close to those April lows, if you will. And maybe some buyers actually do try to step in. I wanted to kind of call this out. RSI still making lower lows, but maybe trying to bottom out here. And MACD is looking like it's trying to hinge a little bit to a bullish cross, and you are seeing some buyers really trying to step in here. So a consolidation at this level. Do we see this move a little bit higher on the concerns that the economy might be slowing in certain pockets? Consumer staples is a lower beta sector, a more of a defensive sector. Do you actually see dollars being put to work in that area of the market, especially after like a Dollar Tree and Dollar General, their earnings? We did see those stocks also pull back here a little bit. So getting close to some key lows for the year for consumer staples. I'm just curious to see if you're going to see a turnaround type of story here, and we start seeing a rotational trade going into Q4 and as we round out the year and start to position for 2026 as well.
Yeah, and it's interesting because then there's the whole added sort of tariff debate as well, whether indeed we have seen a material impact on some of those goods too. I mean, that certainly remains up in the air as far as those diverging views. Kevin, thank you so much for getting us across the data this morning.